Hey, this is Dustin with Dustin's Dollars. Today, I'm going to be talking about Tellurian's 2023 Q3 earnings. Going to walk through that a little bit. If I have time, I'm also going to talk about some earnings preview stuff, what I'm looking at and looking towards for EVA, a totally different company, a wood pellet producer, and what I'm looking at for their report that has not come out yet. It's going to come out this upcoming week. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in both EVA and Tellurian, so this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So, hi Transient Stacker, thanks for hopping on the stream. I'm going to be talking about going through Tellurian's Q3 earnings today and talk about EVA a little bit after that. By the way, if anybody's watching this after the fact, I will put chapter markers in here once the video posts, and I can edit and do that. All right, so Tellurian did report this week, and the stock cratered. I don't think this was immediately, but it did happen this week. Maybe once people got to digest this, and I think I'm going to talk through a little bit in the report, but it became pretty clear that they're going to have to dilute quite a bit if they don't line something else up to bring some cash in the door. It's pretty clear, looking at where the company's at right now, that they're going to need cash going forward, and they have all this money they're dumping into Driftwood, and they basically don't have it. If I even look forward, this is again sort of the highlights of what I'm going to go through in more detail over the next 20-30 minutes. Even looking through Q4 and Q1 with higher Henry Hub prices, they're going to just barely break even, maybe make a little bit of money on the company in terms of cash flows from operations. And then once you look at the Driftwood, the expenses they're putting into there, they're really burning money. They also have to make these cash payments, which is not huge, but they also have to make these additional cash payments going forward if the stock stays below $1.35 per share, as part of some of the, in addition to the interest, as part of some of the notes that they have outstanding. I'll go into the details of that. So in Q3, they did report, and let me just open up the report here, and we can walk through a couple things. I'm going to jump around. So one of the things we were, right off the bat, when you see this, you notice that the share count was up, 634.8 million shares outstanding at the end of October. That was up quite a bit. I wonder if I have the prior. Oh, these are exhibits. I can actually grab their prior report real quick and actually get that prior number so they don't lie to you. Yeah, so at the end of, in mid Q3 in August 7th, there were 581 million shares. So within the quarter, they diluted quite a bit. If we even pull that up, do the math on this one, that is what, 634, let's do roughly 634.8 divided by 581.8. So they added 9% of their outstanding shares just in the quarter. So that was not great. And it's pretty clear, again, as I sort of mentioned before, that they're going to have to continue diluting at this current point in time. How about Kaza? Thanks for hopping on the stream. So they did end the quarter with $59 million in cash. And if you are dialed into the stock, that they have these covenants on their debt where they have to stay above $50 million. So they, in order to not sort of trigger some other things to happen. And so they really can't go below $50 million. So this is pretty close. They can't spend this down and go down to $10 million. They have to actually keep it up at these levels. And I'm going to talk through in just a bit where they're going to need to raise this within the next year, or else they're going to hit some more issues. So one of the things that people talked about a fair bit from what I saw on social media was this statement of a going concern. And I wanted to mention this real quick, if I can speak. So they have, it goes on in a couple places in the report. Basically, they say, there's doubt as to our ability to continue as a company. And if you're dialed in the stock, this really shouldn't be much of a surprise. Again, this is my interpretation, not a financial professional or advisor. But if I understand this correctly, they're basically just saying, between the money we have on hand and the money we expect to make and our expenses over the next 12 months, we don't have the money to keep going as a company. They say they're basically going to continue selling stock under the at the money equity offering program, right? And that's how they say they're going to they're going to continue doing things. Actually, I guess it's down in this paragraph where they say, here's what we're going to mitigate it. But more or less, they say we're going to have to raise money. We're going to have to, and that there's risk, right? That there's risk on the actual price of the stock. As we see when the stock is down at 60 cents, diluting and selling at the market is quite a bit different than doing that when it's at $2, $3, $4, $6 per share. If they were diluting at $6 per share at the current state, I don't think anybody would have major issues with that. But the current price, that's painful. And then again, they say we have risk of commodity prices. Nothing that should be a surprise to folks, I think, who are doubted in the stock. This is just a reflection of where the company's at right now. And again, it's not good. This is pretty clear that it is high risk. I hope everybody's my interpretation, because I know people usually ask me this, my interpretation of why did the stock crater, and even if you look back for a month, it's gone down and down and down, is it became clear they're going to have to dilute a lot. If roll the clock back a year and a half, they had sort of this base valuation we could justify based on being a gas producer and not having a lot of debt, having a lot of cash on hand, and Henry Hub prices were supporting that. And then if then the plan B, which is sort of the call option of Driftwood, that they were developing, that they could, we're getting things all lined up. Fast forward to today, and now Driftwood is, without the financing, Driftwood is a drag on the company, right? It's increasing their risk, where they have to just dilute in order to continue progress on Driftwood. If they stop progress on Driftwood, who knows what really would happen? At what point would Bechtel shift resources somewhere else in a meaningful way? I don't know. There are some folks out there who are more in the industry and do have some insight in that. I personally don't. If anybody in the chat knows or has some insight, I'd be really interested to hear what you have to say. Anyways, going back to the actual report, so that's kind of my interpretation on this, my interpretation on why this fell. One interesting thing just to note, they do have their bonds, their what are these, the 2028 bonds, I think, that are trading under TELZ, and they didn't have a big move this week. The big move for the bonds happened within the past month, about 2 weeks or so ago, on between October, let's say 18th and October 24th, where they got cut in half. And this really, I think, reflects that risk of the company not being able to put something together, not being able to actually line things up and pay these back a couple of years from today. All right, sorry, going more through the report, I did want to deep dive a bit on their debt, because this is also a big piece of where they're at, right? As they have to dilute in order just to raise cash in order to continue funding Driftwood. Maybe I should talk about that just for a moment. So in terms of their operations, let's go back here because it's a little easier to see. For the quarter, they had net production of 19.5 BCF. They realized $2.22 per MCF, and this was a bit below. I had this projection I talked about last week. I actually put together an estimated versus actual. So I based mine right here for the quarter Q3, July, August, September, per EIA, per the Energy Administration in the U.S. 3-month average price of Henry Hub was $2.59. Tellurian actually realized, a value that's much lower, more like 85% of that at $2.22. They did produce 19.5 BCF, which was about, on the higher end of the range of what I expected. So my projection, just going through a couple of variables here, was that they would end up with, this is my estimate of $43.5 million in revenue. They did actually, I think, come pretty close to that because their production was on the high side, but the price that they realized for that production was on the lower side. And I actually looked at this for both. I have the Q1, sorry, you can't see the header, the Q1, Q2, and Q3. It's interesting that in Q1 they realized the Henry Hub average price per EIA pretty well. But then if I look for Q2 and Q3, they really only got, they got a 15% discount there. So this must be, I'm speculating that that's the discount they're giving to whoever they're selling this gas to. Maybe they have some contracts that they haven't actually, that we don't have good insight into. And there's some bits and pieces in the report that sort of talk about some of this, but there's really no transparency, so it's not that interesting to go through with y'all. Let's see. And so where is that? So their operating costs, I can go through and look at this. This is what they actually realized, but then they have, overall operating, GAAP operating loss, and they talk about their adjusted EBITDA, and they do reconcile this further down, which is, interesting to look at. This was their GAAP loss from the upstream segment of, $12.5 million. They add back in, the depreciation, depletion, amortization. That to me makes total sense. That's not really cash expense. Then they also add back in their allocated, corporate G&A. And personally, I would want to include the G&A. And when I'm looking at the company overall, right? Because I don't know what's the company burning. I'm using the total G&A. So that's why their G&A here is, $7.9 million. My G&A is, I'm using the overall costs of, I don't split it out here. $54 million is kind of what I got out of this report. You can look here and look at the statement of operations and kind of say, well, their operating expenses were 21.7. Their total G&A, is 22.1. They also have those development expenses. Sorry, I got another question on the chat. Up North Uper asks, what are the odds of a reverse split? I'm worried. Just talking about that real quick. They are clearly well below $1 at this point. I can't remember. I think it's maybe 30 consecutive trading days. Don't quote me on that. But it's some period of time. If they close under $1 for that whole amount of time, then they'll get they'll get a notice from the exchange, which I think they trade on the New York Stock Exchange. They will say they will get a notice from them, and the company will file an 8K within a couple of business days of getting this notice from the exchange, and it will say, we were not compliant with this rule or whatever you want to call it, of being listed on the New York Stock Exchange. We've closed under $1 for more than 30 days, and we have some time period. I think it's typically 180 days in order to regain compliance. So I don't think they'd be doing a reverse split anytime soon. But in terms of what are the odds of that ultimately happening, this is really going to depend on, can the company put something together, right? If they get things, any good bit of news, I think would send the stock up. In my opinion, would send the stock up pretty violently. Partially that is because, they're in a very leveraged situation, right? Low stock price because they have to fund right now through the at the market program. At the market program, right? A low stock price is sort of a double whammy where they are not able to bring much cash in. They're not able to bring much cash in the door, and then it's also already low because of that risk that's inherent in where they're at, and so they kind of get double penalized for that. But if they have some good news and it looks like things are progressing, right? They signed some deals for Driftwood, for some LNG sales, something along those lines. Becomes clear on how they're going to finance that. Then, or even another possible catalyst could be, Henry Hub prices going up for one reason or another. That it's commodity risk cuts both ways, right? And then it's clearly gone down over the past year and a half, 2 years, whatever the time frame is. That could reverse. It has reversed a little bit. But that's kind of where it's at. And so I think, what are the odds of reverse split really comes down to what are the odds that the company is going to execute and that things are going to, start to look up. Sorry, the other factor that I had in my head I didn't mention is also the pretty large short interest on the company. I think if the stock really were to go up, you're going to have this sort of leveraged movement in the opposite direction, where at least some people who are short are going to close out or trim their positions as some of the fundamentals of the company improve. That's not conversation. Statistics is where I want to look at their most recent, and again, this is very delayed. In middle of October, there were 83 million shares short. Even at the updated, I think this has the updated number of shares. Yeah, 634 million. Even until it's 15% of the float, which is quite a bit. Well, Kaza says they have 6 months to be at $1 for 10 business days straight to be in compliance again. Okay, yeah, I didn't recall the specifics. I think I didn't say that. Thank you for mentioning that. I talked through what would happen in order for the deadline for them to have to meet it, but I didn't say what they actually had to do. Yeah, they have to be above $1 again for a certain number of days. It must be 10 days. I didn't recall off the top of my head. I think it might be 30 days you have to be under $1, and that's when you actually get the notice. And then maybe 10 days above $1 in order to regain compliance. So thank you for that. Hi Ladder, thanks for hopping on the stream. So can't remember exactly where I was here, but I was talking about the cash burn of the company, I think, and I'm looking at all of their expenses in terms of cash, all their operating expenses, all the development expenses, which I think these are real cash expenses, not like accounting stuff, whereas depreciation, that's sort of accounting stuff, not cash expense as far as I understand it. Then you have all their G&A, and some of this is stock-based compensation, but for the most part, I'm just gonna, their stock-based compensation is not huge, so I'm just gonna include all of this when I'm thinking about their cash burn. And so, you're looking at this, their total expenses, just again, quick math in my head, 21.7, or let's just round it off. 22 plus 23 gets us to, sorry, wrong numbers. 22 plus 10 is 32, plus another 22 gets you to what, 54 or so. That's how I kind of got, I think, to my number here in their operating costs. And so you look at the revenue, and they actually didn't quite, they burned cash even just looking at the company before we're even talking about the cash that they're spending on Driftwood. They also had interest expense that they had to pay in cash, and I'm gonna go through just a bit of their debt in a moment. Real quick, got a question. Ladder says, I've been wondering, as just a gas producer, would this be a good price to pick them up for future consideration? Maybe. So let's talk about that in just a minute after I go through their debt, right? Because no matter what you say, you can't really divorce the company from their debt. So real quick, there's a reasonable overview of their debt. Let me look for convertible, here we go, convertible notes. So this is an overview of their debt as of the end of Q3. They have these convertible notes that are 2025, $83 million there they owe in face value, $250 million of senior secured notes due 2025. These are both, I think, held by the same party. And there's some sort of there's a shared lien on their upstream assets that these are secured by. Then they have the unsecured notes due 2028. This is represented by the TELZ ticker, and so that's been outstanding for a while. But that's a smaller amount, right? 57, let's call it $58 million of borrowings. Now, what I wanted to talk through is these are due 2025, which is a couple years in the future, right? That gives them time to put something together. For Driftwood, hopefully they can figure something else out, or if Driftwood is going forward, right, they can probably refinance these with somebody, based on the future cash flows they're going to expect once Driftwood is operational, and probably get some reasonable terms at that point where they could, then extinguish these. Now, one thing to note, one thing as I was reading in the details here, this is, I think, a big deal. On or after October 1st, 2024. The holders of the senior notes may redeem up to the entire principal of the senior notes for cash purchase price. So, a cash purchase price of, the principal and the unpaid interest up to that point. And this is if the company's liquidity falls below $200 million, if they've already paid off, if the convertible notes are not outstanding, or $250 million if they are outstanding. So this, if I understand correctly, is basically saying on or after October 1st, 2024, the holders of these notes can say to Tellurian, hey, if you don't have $250 million, if you don't have the cash on hand, basically, to pay us off, fine, we're redeeming, we're calling you. And that, I think, is a pretty big deal, because although these are due, I think, in May of 2025, or that's when they're technically due, this is letting the holders of the notes call them on October 1st of 2024. And so if they don't have quite a bit of money on hand, right, if they don't have $250 million in order to pay them off, if the secured convertible notes, which is the smaller amount, the $83 million, are still outstanding. And so that, to me, seems like a pretty big risk. I'm honestly not sure what the company's plan is for this. I really don't think they can dilute their way into $250 million of cash. So that, to me, seems like a pretty big risk at the current moment. Again, I think if they are able to put something together for Driftwood, they're probably going to be fine. If they did that and the stock was up more, $3, $4, $5, or even higher, if they really got commitments and they had, quite a bit of expected future cash flows, that is one where you could very, very reasonably be, expect that the stock is going to be much higher, and their at the market program is going to let them raise quite a bit of cash. Anyways, so that, I think, was something that I'd read before, but it really reminded me, and it's just getting closer and closer to that point where this is quite a big risk. And so, if you're looking forward to the company, that's something really to keep your eyes on. It's something to consider. I think this is one of the biggest, points in a current bear thesis, if you're really diving deep, that could be a big deal. All right, couple other things that I did want to go through in this report. I talked about, the dilution, and one thing that was missing here. One thing that, if you remember, they had this announcement about a month or so ago, actually 2 months ago, on September 5th, right, where they said, hey, we have an agreement for Driftwood LNG Phase 1 liquefaction equipment. And so this, and then you couple that with sort of the comments that were on the report, where they were, it was very pithy here, but they said, we are still, where's it at? Remain on target to produce first LNG in 2027. And this was a huge part of that, where they said, hey, we've actually got Baker Hughes. It's going to deliver us our equipment. We've agreed on a schedule for this. One thing that I did not see a note of anywhere in this report, I didn't see any exhibits that talked about it. I didn't see any additional, liabilities on their balance sheet talking about, future payments they expect to make. I have no idea what they're actually doing to get Baker Hughes to actually hold their place here in line. So I thought that was just a little surprised. Anyways, let me go back and talk about where was I at? In here, I did want to note their cash they spent on Driftwood in the quarter. So cash flow statement is for the 9 months, and is for all 3 quarters so far is 168. I think the quarter before they were at 112 million dollars, and so you do the math there. I think they spent about $55 million on Driftwood in Q3, and I'm tying this back to the Baker Hughes announcement. It is possible that some of this cash that they spent on Driftwood project construction costs actually went to Baker Hughes. I'm a little skeptical, because that seems in the $55 million seems in the ballpark of what they've been paying Bechtel, and so I'd be a little bit surprised if that was enough money just to send to Baker Hughes to keep their spot in line. And again, I think I would have expected, I'm not an accountant, but I would have expected there to be some additional liabilities on the balance sheet for future expected payments to Baker Hughes, and I couldn't really see it. So if anybody else has any insight into that, I'd be really curious to hear that. All right, that is, most of it. I think one of the big questions here, obviously, so let me know, folks in the chat, if you have other questions or comments, other things that, you'd want me to take a look at, or that you want to point out. But, obviously one of the big questions is, what are they going to be able to put together for Driftwood? One of the other things here is, what is the share count of the common equity going to be at FID, right? What's it going to take in order to get Driftwood over the finish line? How long is it going to take where they have to try to fund the company and, partially fund Driftwood, with out of pocket and with their own, at the market offering? Because as of right now, diluting the stock at these prices at, 60 cents, 70 cents is really pretty bad. Oh, one other piece. Sorry, I'm just looking through my notes here. I'm jumping all around here. One other piece that I did notice is I lost it. I'm sorry. Where is it at? Yeah. In one of in the senior convertible notes, I guess I have it open in these tabs. So they pay, part of what they're paying in addition to the interest is they're paying shares. And I think I talked about this in a prior video, but this is part of the replacement, the replacement notes that they did in order to get them to agree to that and sort of push out the maturities on some of those payments. They kind of said, okay, well, to sweeten the deal, we will give you some shares. And so they have a schedule of these shares at the bottom of these exhibits. These are exhibits to the Q3 report. You can see on some of the notes they're giving them, this many shares per quarter, and on the other ones they're giving them this many shares. And so it comes out to effectively, it was 2 million shares on October 1st of 2023, and then for all the rest of these dates, it comes out to about 3 million shares. I'm rounding, but that's roughly what it is. And the nasty part for the company and for us as stockholders is if the stock price over that prior quarter is less than this amount, $1.35, then they also have to pay an additional cash payment to pay the difference, right? They call this a stock shortfall payment, I think is what they call it. Talk about the stock shortfall payment date, the stock shortfall period, all this stuff. But basically, if I understand it correctly, they're saying if over the rest of the quarter, the average of the daily, volume weighted average prices is below this amount, then you need to pay us, in addition to giving us the shares, you also have to pay us cash. And so this is kind of going to be a bad thing. Every quarter they have to pay for roughly those 3 million shares. That difference between the volume weighted average price in the quarter and this, amount of cash. And I did look for Q3. They just barely made it. Let me zoom in a little bit. And hopefully this isn't precise. I took the daily volume and the daily high and low point and just averaged it. I don't actually have the volume weighted average price each day, but this should be a pretty reasonable approximation. In Q3, my estimate of a volume weighted average price was $1.38, so it was just right about this amount, right about this $1.35 threshold. And so this means that they probably didn't have to pay any on October 1st, but if I look forward to Q4, unfortunately, the volume weighted average price roughly so far has been somewhere closer to 76 cents. So they're going to have to pay a fair bit, right? So if this is only up through November 3rd, and again, it's not super precise, but if this ends up being, let's say hypothetically, this is what it is at the end of the quarter, they have to pay $1.35 minus 76. This difference is 59 cents per share on that roughly 3 million shares. It's going to be about another 1.8 million dollars they have to pay in cash. So that is unfortunately one more thing that we will have to, that the company will have to do, and that is on top of their other interest they have to pay, and on top of the shares that they're also giving. So this again, and where's that cash going to come from? Probably the at the market offering, unfortunately. So that is kind of where they're at. I put together a little bit of the similar, super quick math looking forward at, Q4 and Q1. Just sort of show where things are at. This is really only looking at their upstream operations because, that's kind of the only place where I expect them to be getting revenue from. Looking at Q4, I got these numbers from a couple different places, but I think this is a reasonable average of what we can see. Some of this hasn't happened yet. November and December, these are futures that we're looking at. So the actual price could differ quite materially by the time this actually happens. But this is the current best estimate that we've got. And, we look at the average here. It's about $3.22 per, just the base Henry Hub price. We assume Tellurian continues to sort of under realize, right? They get about 85% of what the overall Henry Hub average is. They realize $2.76 per BCF. Let's say they produce the same amount as they did in Q3. That would get them revenue about 53, let's say 54, rounded off, $1 million in Q4. And so this would be a bit better. They'd more or less come pretty close to breaking even. I just did the napkin math here. Would assume roughly the same operating costs, and that's almost exactly operating costs matching revenue. Then you subtract off the interest expense, they'd burn about $4 million. And so in the end, if they weren't spending on Driftwood, they'd be about at break even at that point. They would have to make the additional payment I just said for the shares, that share price shortfall, stock shortfall payment, this thing here that I just mentioned. And so that is another bit that you could include here if you wanted to take off another $2 million for that, let's say. But the real big factor here, both of those are pretty small amounts. The real big factor here is what they end up spending on Driftwood. Like I said, they've spent in the first 9 months of the year. Again, coming back to this number, it was $168 million. I would expect that rough pace of spending to continue. So figure another $50 or $60 million in Q4. That's all going to come from, dilution if they don't have any other source of cash. So that is basically everything I had to talk about with Tellurian today. I think this has moved into quite high risk territory at this point. They are diluting, and they're diluting at a low share price in order to try to keep things moving and afloat. We'll see what happens going forward. All right. I did want to talk, if anybody has questions, comments on the chat, feel free to add them on there. Haven't actually seen the chat message. Hopefully I'm still live here. Yeah. Oh, wait. Nope, it's still going. All right, so I'm going to move on to talking about EVA. If anybody has questions or comments on Tellurian, feel free to let me know. I'm happy to jump back to that and chat about it. So, couple of things I want to talk about in EVA, right? So they have not reported yet, so I don't have nearly as much to talk about, but just a couple things that I am looking at and expecting. Oh, Ladder says mine is still there. Thank you. Just checking. Kind of chat went quiet for 10 or 15 minutes. I didn't know if anybody had any questions or comments or any other things they wanted me to take a look at. So, all right. So now I'm talking. Sorry, I'm switching gears because that was everything Tellurian. Again, happy to jump back if y'all have stuff, questions, comments on Tellurian. But another company I'm interested in is EVA, the ticker EVA. They're a wood pellet producer. They are going to report this week, I think on Tuesday, although I'm not 100% positive on that. A couple of things I'm looking at here, right? They are, let me find the right slide. So their guidance for Q4 is adjusted EBITDA of $70 million. It's a range actually from 60 to 80. And, they do a pretty reasonable job of giving you this. Let me find the actual Q3 guidance. Their reconciliation here. That is not it. It is here. Nope. Oh man, I'm not doing very well here. I'm sorry. Let me find slide 34. There we go. Here's the right one. This was the right one. Okay. So their adjusted EBITDA, $60 to $80 million. Let me zoom in just a bit. Maybe it'll make it a little easier for you to see. Oh, sorry. Ladder says, did you end up answering my tell question? I wasn't sure. Thank you for reminding me. I'm going to get back. I will go back and answer your question right now. I'm so sorry. I got ahead of myself here. Yeah, so real quick, let's take a look at it. So I think a reasonable way, maybe I could see some reactions there. I don't know how to figure out who's doing that. So let me look at it this way. So I think if we look at, let's just take Q3 and Q4 as kind of ballparks here. We're looking at production amounts of 19.5 BCF per day. And you know what, I'm gonna make a new spreadsheet or make a new sheet here. So let's do, so what I'm gonna get at here, I kind of would value them through kind of an enterprise value to EBITDA multiple. And maybe I'll just look at their release. I'll do it this way. Sorry, I'm jumping all over. I'm figuring out the best way to answer your question. So let's assume the production just stays flat, 19.5 BCF. And let's look at, so let's do a quick model. Q4, Q1, let's just do Q4, Q1, and then we'll multiply by, that's not very good. So let's do Q2, Q3, Q3, Q4, and then this will be 24 Q1. And just because those are the numbers I easily have, and this will get us in the ballpark. You know, maybe you could adjust it upwards if you really want to look at that. So we're gonna do, production. Let's just do 19.5. I know that they didn't actually do 19.5 in each of these quarters. Let's assume we were looking forward, they would do that. And if we're doing cost per BCF, and then the numbers that they did get in Q2. What am I trying to get here? Q2, Q3, Q4, and then Q1. So Q2, they realized $1.85. Q3, they realized $2.22. So I said $1.85, $2.22. In Q4, and again, these ones going forward, I'm just looking at EIA numbers or futures numbers minus 15%. And so if I look at, here we go, Q4, Q4, let's call it 276, and then Q1, 311. So 276 and 311. And this is them, sort of undercutting, undercutting the actual Henry Hub price. And so multiply, revenue, this would be in millions. This is BCF. multiply those out, B3 times B4. And this is where it gets interesting. We're going to do operating expenses. I'm going to do some adjustments here. So let's do it this way. Let's let me look at their actual. So their operating loss was 12.6 million. And they. Some of this 12 point. What do I want to do here? I want to add back in the depreciation because I don't want to count that. We're looking at enterprise value. We're assuming just where they're at. I don't think you'd value them. You'd look at their EBITDA, but I would include their G&A. So let's use this here. So this should come out to 18.3 for Q3. So Q3 should be 18.3 in operating income is what I want to get to. Because I want to look at if I was just valuing them as a gas producer, I think you'd exclude the G&A from the rest of the company. And I could probably look deeper in their actual quarterly report, but I'm trying to just do a quick model here, try to get those numbers. And so then that gets me operating expenses would be C5 minus C7. Just I'm sort of doing this by difference. So let's keep these expenses flat for all of these quarters. That's not right. 24.99. Let's do this, and we'll just use this number, and then we will do the operating income as being the revenue minus the operating expense. I know, again, this is kind of a pretty simple model, but this would get us to a rough trailing 12 months operating income here. And so let's assume if they were, make a dumb assumption, make an additional adjustment on expenses. And so there's one thing that they've mentioned in their quarterly report. I don't know if too many people saw it. They have this rig standby costs. And they said in 6 months, in 9 months, most of this was occurring in 6 months, about $6.9 million of rig standby costs. So I assume if they were trying to be a lean natural gas producer, either they would be spending more to develop, and so they would actually, you would see some increased production from this value, or they would eliminate this somehow, right? Maybe I'm going to be honest and say I don't know that much on the actual details of natural gas drilling and rigs and such, but I would imagine they could probably reduce this down, probably eliminate this. And so let's say, I think in the 3 months, this was $3.2 million of their expenses. So let's do an additional adjustment here, because I think, again, if I'm just valuing them as a natural gas producer, give them an additional $3.2 million for every quarter. And so, adjusted operating income of B7 plus B8. And so let's do this. So this would be a rough, partially trailing, partially forward-looking actual, model of operating income. And so full year operating income, sum of B9 to E9. So that's roughly like how I would look at their EBITDA. Give them sort of let's say a 5x multiple on that, for an EV to EBITDA would be B11, EV to multiple of 5. And so this gives you to an enterprise value of about $533 million if we were to look at things this way. Maybe the market wouldn't go quite that high because I have made some adjustments here, but that's how I would model out how I would value them personally. Now you look at that, and let's look back at Tellurian, market cap. They're $394 million, but enterprise value, they're more like $700 million because they have a little bit of cash on hand, like I said, 60 million or so. But they have all that debt, so you subtract all that out, and I think, because I did the math beforehand on what their enterprise value is, it's currently about $700 million. And so if we're valuing them just as a natural gas producer, if they had no debt, I'd put it about here, let's just call it $500 million, round it off, because this is a very, very, rough math model. There's a lot of precision in these numbers, but really I'm just getting ballpark numbers here anyways. It's just it's Google Sheets is giving me all the precision. That's about where I personally would value them. I don't think natural gas producers deserve a particularly high multiple. There's a lot of risk. If Henry Hub prices go down by another 30%, these numbers look pretty bad. You know, I'm just going to roughly, you know, if I roughly put these numbers down, this is the actual ones. I'll just copy it out up here. And if I did, you know, I'm just manually adjusting this down, you know, 2.4, you know, 2.8. Like if that's what the, you know, again, this is super, actually I could do this even better. Times 0.7. Ha, I'll use actual math. Sorry, I'm dumb sometimes. So if I did this and I said, well, natural gas prices went down by 30%, all of a sudden, now their operating income would get cut in half, right? And so they really have quite a lot of commodity risk. So I don't think natural gas producers should really command a particularly high multiple, if that's all they are. And there's a lot of commodity risk. And so I think 5 is reasonable. Maybe you could even go lower, but that gives you $100 million in valuation. Let's say 3 to 7 would be a reasonable range. 300 to $700 million. I know that's a pretty big range. You know, it's like a 2x in their valuation, but that's kind of where I would put it. And so then you have to figure out how would you value Tellurian when you have Driftwood that's partially complete, and you know, I think the value in all those assets, but then all the debt that's come along with them trying to actually get Driftwood going. And that gets pretty, you know, that gets really hard to value. You know, maybe you could, if you really wanted to squint and say, well, let's say they had let's say current management got ousted, and then, you know, some venture capital fund just wanted to chop them up and make not venture capital, private equity, something like that, right? Once it comes in and they say, great, we're going to extract the value out of Driftwood. And the best way for us to do that is not to be an operating company and to line up the financing. We're just going to sell it off, right? This is an asset. We think it's undervalued by the market at the moment, you know, at an enterprise value of $100 million for the upstream and Driftwood. If you assume that they could at least sell Driftwood and break even on their debt, right? Pay off that debt and eliminate that. Now you're looking at, you know, Driftwood's gone, the debt's gone, market cap $384 million versus a valuation that I think is fair, around $500 million. So there you'd have, you know, it's be trading probably a little bit below fair value. That's how I would try to answer your question ladder in terms of actual, you know, valuing them just as a natural gas producer. I think at the current moment, you can't separate the two, right? Because management has no real, yeah, and this has become clear, even in the face of, you know, significant adversity, as it seems, right, and a kind of a lack of progress and being in a very bad spot. They're not having talks, you know, publicly at least, of let's sell Driftwood, or, you know, let's even spin off the upstream operation. You know, that they really say we're continuing on with this ship, you know, and people, I think people are looking at that and saying, you've burned a lot of cash to date. You know, where's the progress? And this is why I continue to say it's a high risk, high reward. I think it's much higher risk now than it was a year and a half ago, you know, largely due to gas prices and due to the, you know, loss of the sales and purchase agreements for the LNG. There's a lot of factors that go into that. But I think I used to think it was a really good plan B of say, hey, we can at least value Tellurian. There's value as a natural gas producer. As of right now, I think it's hard to really extract that out as a plan B valuation. Hope that makes sense. Let me know. Wow, there's a lot more in the chat. Sandor, sorry, I'm sure I'm mispronouncing that. It says, hey Dustin, I hope you're doing well despite of Tell. Yeah, I'm doing good. You know, I have certainly lost a fair bit of money in Tellurian unrealized. You know, I've been holding it for a long time. I'm comfortable with my position. I think it's you know, still high risk, high reward, and you know, if I lose all the money I put in Tellurian, I'll be grumpy, but it's not going to ruin me. On the other hand, I still think there's, you know, quite a bit of, you know, potential. The upside is massive if they can, you know, line things up. I think it's getting, you know, as of right now, even short term, you are running the risk. You're just asking yourself how many shares are going to be outstanding by the time they actually get this done, if they can get it done. And I think there's, you know, maybe some people got a little spooked by that. Yeah. So that's kind of one of the things. All right. The Flick channel, financial literacy is key, says, I always enjoy watching videos. Thank you. Thank you for the kind words. Appreciate that. Anthony says, Meza thoughts. I don't know. I don't have any particular insight into, you know, what they're getting for the financing at this point. You know, I think it'll be, obviously I'm crossing my fingers that they're going to line some things up. but I don't have any insight into it. Sorry. Wish I did. I still, my 10-second statement on just that whole general thing and my undying optimism for Driftwood is I still don't think management is wrong in saying, there's still, the world needs more LNG, right? And it is constrained at actual the production, the liquefaction. And Tellurian has a site. They're already in progress. If people want it sooner than 2029, they probably have to go with Tellurian. I think that's, you have to ask yourself, is there somebody out there who's eventually going to capitulate and say, I really want my gas sooner, right? I want it in 4 years, not in 6 years. And that's, to me, I think the odds are in their favor. But again, I think it's people, on the other hand, people are going to negotiate hard because they want to get the best prices on this stuff. So my then how 2027? That's a good question. So I think as of right now, I think it's credible for them to still say 2027, but it's, rapidly closing that window to where it is credible. And I think the key here is really that critical path on them actually getting things done if they have all the money, right? And I don't have all the links to bring up right now, but, they've progressed a lot of stuff and all the initial work, right? And you look at their time frame of that 4-year window, and I think they've chopped off some bits of that. Sorry, that's a time frame that's in their FERC reports. You can see that where they're talking about, here's some of the activities they're going to do and the schedule. They're working with Bechtel, right? They've done a couple limited notice proceeds to kind of say, and I think they've been strategic about it and trying to really, look at their options and say, what is the minimum amount we can spend that's going to keep us, that's going to compress that critical path to, that's going to chop off a month or 2 months or 3 months, however long it is, right? That's my optimistic take. I could be totally wrong. I don't have particular insight into this. I'm not an LNG industry insider. So if you disagree, feel free to disagree with me. But I think, it's once they get the financing in place and they can actually write a big check to Bechtel and say, all right, send a bunch of people here and get things going. I think they, have all the plans in place. Maybe if it's another quarter, 2 quarters, somewhere, if they don't have the money to actually get Bechtel going, like these small limited notice to proceeds are not going to help. And they've already pushed it, right? They originally were saying, I think when they started construction at the beginning of the very beginning, when they said, hey, we're going to start construction on a limited notice to proceed, I think they were still targeting like mid 2026. Now they've pushed it to 2027. And they're not very specific. They say, if you read the statement, we're on target to produce first LNG in 2027. That could be Q4. I think so. That's already reflects, a year and a half things being pushed back. Maybe it's only more like a year. I mean, maybe they were originally only targeting the end of 2026. Maybe the mid 2026 was too optimistic. But sooner or later, it's going to just be a 1-to-1 delay where until they get the financing for FID, that's delaying when they can start everything. And really that just means, every day they have a delay in getting the financing is a delay they're going to have in producing LNG. We don't know when we're actually going to get to that point. All right, lots of comments from Anthony. Said they're not doing that. Sorry, I don't recall what that was. I wasn't watching the chat. I'm not sure what that's referring to. Ladder says it does. Thank you. Great. Great. Glad I could answer your question. Anthony says, you really think they would do all those construction and not have a plan? So again, I think they have a plan, right? That's why I'm still invested. Management has been around for a while. I just think it's, at the same time, I look at where they're at and they're not as far as I think they're not as far as they insinuated they would have been, a year ago. They're not as far as, so you have to take what they say with a grain of salt. I think they have a plan. I think they had plans in the past and those haven't worked out. So, at the same time that I am optimistic, I'm also skeptical. I have sort of two opposing viewpoints. That's I would say that I just have eyes wide open of what the risks are. They have plans. They may not come to fruition. That's kind of my take on it. I do think, I do have some trust in management. I do think they've done this for a while. I think they are holding their own options, in the stock, and are holding their own stock that they have. And, they also want to see the stock, do well. And so they're trying. Let's see. They keep stating that they're holding that year. The equipment purchases, big money being committed. Correct. We will get the third notice soon. My guess, maybe they will announce something soon as needed for construction support. Yeah, I hope, right? Like, they're getting very, very close to this point where it's clear they need money, or else things are going to come to a standstill, effectively a standstill. So yeah, I'm really hoping they announce something soon. Transient Stacker says, do you think they might make a bad or not so good deal if they feel they have no choice? Unfortunately, yes, I do think they're at that point, right? I think they've come pretty far and haven't got over the finish line yet. And again, that's my take. Who knows? I don't know what they're actually going to do. They talked quite a while ago. They famously said they had, something like 50 counterparties, 50 non-disclosures signed, or whatever the statement was. This is the easiest thing they've ever done. And I think they were trying to make a good deal. Like that, they stated that in some similar words themselves. It became pretty clear they felt like they were negotiating from a position of strength, and I think that strength, they eroded as they were negotiating. I think things slowly kept getting a little worse and worse and worse, and people saw that, and so they didn't make the deals that they had on the table, and now the numbers tell the story, right? They are fairly. I don't know why I'm looking at this. There's no one number I can point to other than they're sort of being just barely above their minimum requirement for the cash position, and having that big potential call on their bonds, on their notes in October of 2024. It is crunch time for them, right? They have to get something done, and so yes, unfortunately, I do think they might make I don't want to call it a bad deal, but a not so good deal, right? Maybe I've done a whole lot of modeling on this stock. I've shared a lot of them on my channel. There were a set of very optimistic assumptions you could make and you could put in terms of those models and say, look, there's a potential that even just phase one, I don't think this is true anymore with where they're at. I don't think it's likely, but there are small probability, ways that the stock could have been, the company could have been valued to where the stock price was more like, $30-$40 just based off of phase one, depending, if lots of things lined up well, in 2027, 2026, 2027, when things actually were operational, lots of those things haven't come to fruition. My optimism for those very large numbers at the current moment is gone. I think they're still possible. They're just very low probability events, in my opinion. So hopefully that's my opinion. Everybody kind of has to make up their own mind on how, look at the numbers, look at where they're at as a company, and just decide, how desperate are they for a deal? Because I think if they wanted to just get any deal done, they could probably get something done pretty quickly, right? They're trying to thread that needle of, getting the best deal that they can. And I think I think the evidence shows that they kind of failed on that, a year or two ago. They didn't actually make the deals. And so to answer your question, I would say that probably means they're more likely to make a deal that they're more biased towards, let's actually make a deal this time. But again, we'll see. They clearly haven't been, they haven't announced anything yet. So they've had plenty of time. So it doesn't seem like they're even still rushing it, but they're again getting very close to the point where they're going to need to do something. And Anthony asks, stock price prediction. I don't really want to. I've got a bunch of models. I think you can check my prior video or two about Tellurian for kind of how I model things out. And a lot of those, there's a lot of assumptions. All of my models pretty much are post FID decision, right? At post FID, and that's because until they actually get to that point, a dominant factor in the stock price is sentiment, right? What is the consensus estimate, right, of the market on how likely do you think it is they're going to put something together, right? I can model out all sorts of assumptions and tell you if they FID with this particular financial structure, here's what I think that would be worth, or here's a reasonable range. But even if I had a model and I was like very sure that's how they're going to put the financing together, they do have a model in their investor presentation, and I said, you know what, that's probably worth around, let's say $6 to $10 per share, and again, it's the hypothetical. You'd have to discount that back in terms of the market, even if everybody agreed that's how they're going to do it. Everybody's looking at it saying, how likely is it they're going to actually be able to get that done? 10%, 5%, 80%. Everybody's got their own opinion on that, and that prevailing sentiment is what really drives the stock price. So I don't have any particular prediction. And so, and a lot of it also is going to depend on it's also easier, I would say, to predict the value of the company. At this point, it's going to be hard to predict how many shares are outstanding. I think even the current authorized share count of like 1.6 billion is not necessarily an upper bound, right? They could go through, they could authorize even more shares. There could be 5 billion shares outstanding in 2027 when they finally get gas on the water, or 2029, or whenever it is. There's so many unknowns at the moment. So Anthony says thank you. Sorry, I don't think that's actually a very helpful answer for you. And that's just to say that there's so many factors that go into it. I think but I guess maybe this is me saying, I think the stock price is dominated by the skepticism that they're going to actually get FID, and or the degree to which they're going to still own a chunk of Driftwood, right? Maybe there's some sentiment in there, or some prevailing opinion of, Tellurian is in such a bad position that they're going to have to sell away so much of Driftwood, or at least Driftwood Phase 1, in order to actually get it over the finish line. They've been trying. I'm going to bring up the investor deck, and I think even the most recent model that they're putting forth and saying this is how we want, this is how we think we're going to put the financing together, is that they're still going to own. They're trying to sell 55% of the equity, meaning they still want to think they're going to still own 45%, and maybe people are looking at it and saying, we're looking at where your company's at, and you're desperate to make a deal. We think you're going to walk away with 20% of the equity in Phase 1. And again, I'm not saying that's the case, but that may be the prevailing market sentiment, and that prevailing market sentiment is going to drive the stock price. So Anthony says, we appreciate your info. $10 to $20 is my guess. Hey, if it goes to $10 to $20, I'll be pretty happy. I've averaged down. My first purchase was around $8 many years ago. A lot less shares outstanding, and I've averaged down multiple times since then. If it got back to $10 to $20, that would be fantastic. My guess is that they own 30%. Yeah. And again, I think I have a prior video with some spreadsheets, and I think it even linked the spreadsheets on where you have these as parameters, right? You can put in, this is how much I think they're going to end up owning of Tellurian at the end of things. Yeah. All right. I think I'm going to defer unless there's any other comments, I'm going to defer my chat of EVA. I'm going to have to do that. Maybe I'll be able to do it tomorrow night. Maybe even later time if I can. I have to go and probably make supper right now. So I'm going to hop off. That was, I think, my longest stream to date. I really appreciate the chat. I really appreciated having everybody on. This was absolutely a fantastic back and forth. I hope I can do this. I'm going to try to keep streaming on Sundays around about this similar time. This is mid-late afternoon in Eastern U.S. time where I'm at. And so I'm going to try to keep this up as many weeks as I can, try to make it kind of a regular thing, and then we can get some, get some back and forth going. Let me know. I'm going to hop off now. Let me know. You can either reach out through email. You can find it through my YouTube about profile or whatever, or in the comments below, after the video post. Let me know what you're interested in, what you would want to talk about. I've obviously got topics I'm interested in, and I will, be preparing some material on those, but I'm happy to talk about whatever. So, all right. Thank you very much, everybody, for watching. Really appreciate it. Have a good one. Take care.